So are we approaching? How close are we, Dave?
Hey, good morning. We are about on the CSI 300. We're about 100 points. So that, in percentage terms, that's about 2%, or in other words, in other terms, a good day away from that 20% threshold. That's academic in some cases, but I think it does highlight, of course, the turning of the tide here. We've seen. It depends where you look. Some benchmarks are up, 17%. Some other benchmarks are, in fact, already past the 20% threshold. You look at the small caps. You look at some of the other benchmarks. HS Tech yesterday was at 4.7%. So I think very short term, you look at things like overbought signals in some of these markets, because this market does seem to have run up quite a bit quite quickly. I think just to end in a nice statistic as we wrap up this month, a couple of days left, Chinese stocks are actually on track for the best month against their global peers in 7 years. 14, that's
Wow.
4 percentage points over MSCI All Country Bond.
It wasn't too long ago, too, David, that this market was seen as uninvestable. How are conditions looking? Will they remain conducive to really support this rebalancing back into China?
Yeah, I think that's a very interesting question. Simply because, you know, what is uninvestable now? You look at the other side of the coin, and inflation, and you were just mentioning, traders pricing in 50 basis points,
Yeah.
possibly out of the Bank of Korea. 50 is obviously a given for the Fed. I mean, the debate is, do we get another 75? Inflation and rate hikes have made the other part of this global equity market in a lot of ways uninvestable. And, this equity market, you mentioned the PBOC also coming out and saying the opposite. And you also have relatively cheap valuations in this market because it was uninvestable for a time. It's very hard to make the case against building an exposure to China with everything else happening outside. And the expectation is that continues.
Okay. Is there anything that you think could kind of be a hurdle in this rally? Any immediate risks that stands out to you now?
Earnings. So I had to look at 12-month, rolling 12-month, just to be more specific, rolling 12-month earnings estimates, EPS on MSCI China. So since the peak this year, they've been revised on about 15%. And it certainly does highlight, because the second quarter was a bad quarter, or it will continue to be a weak one. Watch out for the earnings season, and the guidance, of course, from companies ahead. Because, yeah, valuations might look cheap, but they might not look as cheap as they seem, because they're still seeing some downgrades.